Thank you, Mr. Chair and Administrator Guzman. What a delight to see you and to follow your success from afar. Appreciate all the hard work.
Thank you.
As you know, the recent Federal Reserve study shows that fintech leaders, quote unquote, have a potential to create a more inclusive financial system, allowing small businesses that were less likely to receive credit through traditional lenders to access credit and to do so at a lower cost, end quote. How can fintechs fill gaps in the market in the SBA program and get more dollars to traditionally underserved communities that usually are trying for the first time in many cases to access capital?
Studies have shown that fintechs operate more successfully in zip codes that are more banking deserts, that they're able to fill capital gaps. Just if you look at them as a business model, they're going after the gaps that the banks are not going after. So those small dollar loans is where they've made a lot of headway. While there have been good and bad actors in the fintech industry in the past, they've demonstrated within our programs that they helped to ensure that underserved communities were able to access critical programs at the SBA.
Great. 7A operates to provide capital to those who can't otherwise access it, but also have the ability to repay loans. In order to lower the risk to the program and target SBLC lending to smaller businesses, would SBA consider imposing initial caps on the loan sizes for new SBLCs that are gradually increased as new SBLCs mature in this program?
Mm-hmm. The SBLC is an established program for multiple decades, and what we're trying to do is drive in our licensing program, our licensing component of the SBLC, proposed SBLC program, a drive towards filling market gaps, which is in the small dollar lending space. And what we're trying to do is incentivize loans, especially $500,000 and under, within this program and then broadly across our 7A program. And so we're continuing to look at ways to ensure that happens through our oversight and protections that are in place. And so I'm happy to look into this further with you.
Yeah, I saw that there were a number of comment letters on the rule to remove the moratorium on SBLCs, and we look at that in a supportive way. I thought I'd ask a question also about, as a veteran borrower of the 504 program, are there ways we could expand that program as well? And I realize that those loans generally are smaller than the 7A loans and not as popular with the banks, or certainly different kinds of lenders. But I look especially with truly small businesses, immigrant-founded businesses. It is a unique way they can enhance their exit when they actually sell their business. When you own your real estate, it's a big difference. And in my case, the multiple of free cash flow was almost double because we owned the real estate compared to if we were just selling that cash flow.
The 504 program, I agree, is one of the critical mainstays for small businesses who have to be able to defend and stay in the location that they started. In many cases, it gets expensive. So owning that real estate also is a retention strategy for longevity. We're looking at the 504 program currently, but as well, I would say that the rule changes that we're making right now are supported by NADCO, which is the National Association of the Development Companies, who are organized around our 504 program to deliver this program. They will tell you that the affiliation rule is a barrier, which focuses too much on control and not enough on just simple ownership. So the NADCO is completely supportive as they believe that will unlock some capital and obviously propel the 504 program further. So I'm looking forward to being able to streamline the program, cut the red tape, and have the support of NADCO.
Great. I think that's perfect. And I think the potential, especially in some of the franchise programs where franchisees could be encouraged to purchase their building as well. There are very, very few franchise companies that do that. Some of them own the property themselves and allow their franchisees to rent it from them. But I'm a big believer in that long-term success. Last question. We talk about this every time we've ever been together. Reauthorization, it's been 20 years. How can we talk about reauthorization in such a way that we can reaffirm our commitment to Main Street?
Mm-hmm. Well, obviously, the SBA is celebrating its 70th year this year, and we were focused and founded to ensure competition and innovation exist in our economy through small businesses. SBA has evolved dramatically since it was last reauthorized in terms of the types of programs like STEP, SBA Express, and some great programs that exist at the agency today. But we look forward to working collaboratively with the committee as reauthorization is considered, and based on that, ensure that the programs and services that we offer to small businesses are supported. And I can only offer my support to make sure that that process is as effective for our small businesses and the outcomes that they need.
Great. As always, thank you for your public service. I yield back to the chair.
Thank you.
Senator Butt.
Thank you, Chairman. Administrator, thanks for being here. Appreciate your time today.